The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Looking good, Billy Ray. Feeling good, Lewis. We'll start out the day like we usually do, looking at the German DAX and the FTSE. As you can see, they've reached some pretty, we haven't quite made it yet in the FTSE, but the DAX has certainly reached an area that might be some good support. Folks, one of the services that they have here at TFNN, David White and Tom O'Brien have their charting package that shows the different Gartleys and butterflies that pop up on their automatic service. It's really quite, the fact is I can share one of them with you right now. The reason why I think it's important now to look at this is because we have so many of these darn things that are happening. Usually there's only a few, but as David pointed out today, there's just all kinds of them. I'll just run through a couple of them here that might be interesting. Here's a financial company, but this is really, in fact, if you want these, just drop me an email and I'll forward on this. There's actually 19 of them today that show up for potential buys and sells. Now, I wait, like on this particular one, you notice it's at a 62% retracement on this American Financial AFG, but it hasn't made the ABCD. So I like to look at that to see if it makes the ABCD, which would be at the 78% level. But this is telling you to get ready to buy it. And you've got a lot of things happening with it. Now, another one, there's a whole bunch of those. I don't want to go through all of them because I don't want to steal David's thunder. But if you'd like to take a look at that service, I think all you have to do is contact TFNN, and they probably have a trial service that you could take a look at it because it does it automatically for me, and they're very good. I mean, there's no question about it. Okay, there's a chart here that was sent to me by Rich Anderson, which he always has some good information. But this is the situation going on in the Nasdaq. Evidently, there's been a huge short position put on here, and of course, you can see the Nasdaq had that big break. And so whether that means that the break is over or not, I don't know. All I know is that it's been acting, bearish up until today. And then the key level today is right above 11,000. If we get above 11,000 and like 11,050, that would tell us that possibly we're getting ready to go. But the real key number there is right at 11,000. So watch the Nasdaq at that level. The level in the S&P has not changed from yesterday. It just moved a couple of digits away. That is 32.95. That would define the downtrend of what we're watching here to see what's going on. Now, today is the autumn equinox. If you ever get a chance to go down to Mexico to Chichen Itza, which is about about 1 hour south of Tulum, and it is really it's really a beautiful place. The pyramid is right in the middle of the Mexican jungle, and there'll be 250,000 people there today, folks. And when the sun hits the exact top of the pyramid and starts to move from east to west, it forms a shadow that looks like a snake going down the side of the pyramid in perfect right triangles that goes right out into the jungle. It's really spectacular. You don't even have to go there to look at it. I guess you could probably find that picture of that online. I went down and saw it. I saw this was 30-some years ago. I went down to see it when I was doing the book Astro Cycles, A Trader's Viewpoint. I got really excited about some of these things that have been done in the past by people that we don't know who they are. But anyway, that's neither here nor there. So just sort of keep an eye on that. I've been asked to comment about lumber. I have never traded lumber, folks. In my whole life, have I ever traded lumber? And even back in the days when I could have traded lumber, I didn't trade lumber because it's basically for commercials. And we were talking about this weeks ago. And if you'll notice here, it had all that move up. It looks absolutely, you can see the ABCD pattern from June all the way into September. Look at the number of times it went limit down. You see those little red dots? that means you couldn't have got out. And now it's dropped over 50% of that whole move already. We got up to 8.25, I believe, and now we're down around 550. So that's not for the faint of heart, but the reason why I'm showing you this chart is twofold. Only trade things that are liquid and active. This thing is not that liquid, and it's certainly not that active, so find something else. Now, maybe if you're in the lumber business and you can do that, then that's fine, but the easier things to trade are the euro and things like that. Those are the ones that you can, hang your hat on and, quantify your risk, very, very closely. Now, today being the 22nd of September, this was the day that Larry Williams, talked to us about or sent a paper out over the last few days saying that day, that's today, that it has been down day in the market 22 times in a row. The last 22 years, on September the 22nd, the market has been down. Now, that in itself ought to mean something. I mean, that's a statistic that's just really hard to believe. Folks, I don't know if you know this or not, but of all this trading that started way back when it was under the buttonwood tree there in New York, of all the days, up days and down days, do you want to take a guess? How many up days have there been on a percentage, and how many down days have there been on a percentage? Do you want to take a guess? I'll make it real simple. I think it's like 50.5 to 49.9. I mean, number of bullish days versus bearish days. I mean, that's very, Marshall, you're spot on, right? It's 50-50. And the difference is that if you're long something and you miss the biggest up days in the move, you're not going to make any money. And if you're short and you miss the big down days in a move, you're not going to make any money. So you got to be there when they're playing the game, and that's what it's all about. And that's why it's important from our perspective is to pay attention, to what the patterns are doing and what is our risk to get in to see if those patterns. We had a very nice move down in the Nasdaq. We were flat that. The euro's still working nicely. That's the only position that we have on now. And we did have a couple of down days there, Mr. Bill, but that's pretty good. There'll be more. Now, I wanted to share with you another chart here from one of our students. Bring it up here so you can take a look at it. This happens to be the Dow E-mini. Now, my first comment on this is if you look at the coloring on the background, folks, use a light color, either a white or a tan or a mauve. But don't use a dark color. Blues and blacks are really bad. When I was at Commodity Corporation, they had a full-time, artist that said you got to use this for aesthetic purposes. To use the lighter colors as the background to your charts. The other thing is you can see all the moving averages that are there. I frankly, all that does is clutter up the chart. I would suggest that you just get rid of that because you're not using it as far as an entry. It might be support and resistance, but you don't really need to do that. If you'll just look at the resistance on the Fibonacci numbers, that'll tell you what you're looking. And also on your grid lines, you could lighten those up a little bit or get rid of them because you don't really need to do it. Now, if you use oscillators, that's great. And, some people use them with precision, like Steve Rhodes and Basil Chapman, of course, and even Tom O'Brien. But, I'm not an oscillator person, but, they do work. But try to, this chart's just a little too cluttered. Now, the chart that they're showing here is their head and shoulders, but it's a reverse head and shoulders. All right, let's take a break here. 877-927-6648, and we'll have Shane Smolian on at the break.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and I believe we have Shane Smolian, the wolftrader.com, on the line. Shane, are you there?
Good morning, Larry. Can you hear me?
Yeah, coming in perfectly. I'd like for you, if you could, start out with the COVID, because we have friends over in the UK, and we got several messages today telling us that they were shutting down over there and they were getting more scared than before. So can you tell us what you're looking at, my friend?
Sure. Well, the data that I have is mainly for the United States, but I will say that there is a second wave going through Europe right now, and we actually have on the autumn equinox today, the sun is passing over the Aries point, and I've been tracking this COVID transit, which moves across the Aries point, and the sun will be equidistant from that tomorrow across the Aries point. So that typically marks a time of a little bit of a spike in COVID activity. I do have a complete graph of that on the actual newsletter, but we'll start here with the United States. These are the daily statistics. Now, I have these statistics, which I'm going to show you, and then I'm going to show you a chart that I actually plotted from the CDC. So first of all, in the United States, there's 6.5 million cases, and we just passed 200,000 deaths, so that's a pretty grim milestone. And worldwide, there's 31.4 million, and the amount recovered have been 21.5, so 2/3 have recovered, and 966,000 deaths. Now you look over here on this graph, and you will see that if you just look at the number of cases, you can see that we had this second surge here, and we're pulling back. And it actually looks like this second surge is worse than the first surge, but that's not the case. What's happening is you're getting more people being tested. And so what you need to do is you need to normalize the actual tests on a percentage, like what percent of the people are actually testing positive. So this is important because when you have more tests, you have more positives. So what I've done is every day I collect data from the CDC, the European CDC, and I get a graph here. And so what I do is I actually track the cases per test, which essentially is like a percent positive rate. So this is the actual true chart of COVID in terms of what's going on. So the actual peak was back here on April the 11th at a 21.5% positive rate. That was the peak. And by the way, the tests weren't even that good back then. It was probably worse. The tests have gotten much better now. The first low came on June 16th at a 4.5% positive rate. Then during the holidays, we went up to 8.8%. And believe it or not, guys, in the United States, we just hit an all-time low on September 15th of only a 4.36% positive rate. It's currently 5.2. So what that means is that in the United States, not over in England, but in the United States, we're actually at all-time lows in terms of people testing positive. Okay, so this is the most important graph because it's controlling for the number of tests. So we're doing better. I mean, that's the idea here. Now that doesn't mean things are going to get better in the short term, which I'm going to show you in a few graphs. So next graph here, this is the hospital bed occupancy. So this is the percent of patients occupied by COVID. So just to put this in perspective for people, usually about 60% of the beds are already full, 70%. So if we get to a number of 30, then that means that the hospitals get full. So right now we're doing pretty good. You can see some of these southern states. Georgia is up around 10%, but most of the states are still very low. So this was the big concern of people in the beginning. The number of people beds occupied right now in all hospitals is about 70%, and only about 5% of those are by COVID. So really, you look at about 65% is full without COVID. So we can really handle about a 35% increase. So that's the idea there. So that's looking pretty good right now, but that doesn't mean things are going to stay that way simply because we have flu season coming and people are going to be indoors more. So what I have next is a graph. I'm going to show you, this is like a time history, like a sequence of the flu season. So this is statistically what happened last year. Now this is right now, this is September the 12th, 2020. And you can see these green states, that means nobody has the flu. But if you go through time last year, if you go to November 23rd, 2019, you can see that the states start to turn red. So right around Thanksgiving, the flu starts to increase. Then if you go all the way up to December, you can see that these states start turning purple. December 28th, this is really high flu season. And then you can continue and get to February 15th, it's still bad. So all the way out into February, so that's a long time. And then if you go out into March, you still have issues, although it's getting a little better. The southern states that are a little bit like Florida tends to do a little better, but you have these big outbreaks. So the idea here is that we could have COVID increase through March if we don't get a vaccine, which I think we are, by the way. But the flu is also coming. So those are dual threats coming. So right now it's important that it's very good that we're at a low right now on those ICU beds. So if you go just another month out to April, you can see the difference. So I'll go back and forth. This is April. This is March. So from March to April, there's a drastic improvement. So once you get to April, you start to see an improvement. So this is just a regular flu. And then once you get to May, everything's pretty much clear. So that's coming. I mean, that's not whether we have a vaccine or not. Whether we have a vaccine or not, this is coming. The flu is coming. So this is the actual age groups here. So just to show the vulnerability. So I think we've talked about this before, but most of the vulnerability you can see from 0 to 4, it's 7. This is per 100,000, 17.3. 18 to 49 is 116. So once you get to 50 and above, that's really when you see the vulnerable population, which I think we know this. But you get to 255 and then 460. So essentially, you're going from 18 to 49, and then 50 to 64. You double, and then you almost double again after 65. So it's very, very important. If you're older and if you have these pre-existing conditions, that you're much more susceptible to COVID. But the number of deaths are decreasing, which is good, and so that's a good thing.
Sounds good to me. Let's go on to the markets here. What do you think is going to happen with the Fed? Are they going to keep pumping the juice in?
Well, I think on the short term, the Fed juice is definitely pointed down. The Fed juice went into a sell on September the 11th, and we actually had a couple of decent short days here, or downside advantages. I still have us pointing down. I think this could last throughout the remainder of September. I don't see this turning up anytime soon. But we look at market sentiment. It's this is the Fear and Greed Index. We're only pointing at 51 right now, which is not that low. So if this market wants to go lower, this is telling us that it could. I mean, typically you'd want to see readings of around 25 or lower to put in some type of a low. So I think with the Fed juice pointing down, and this is a very rare time, Larry, because you and I are actually in agreement right now. So
we are.
On the market pointing down.
Hey, let's take a break here, and we'll be back with Shane Smolian, WolfTrader.com. We'll be right back, folks.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. We're talking with Shane Smolian, WolfTrader.com. You want to continue, my friend?
Sure. Just to let the listeners know that my website is www.wolftraderfutures.com. It's no longer wolftrader.net. So if you're going to wolftrader.net, it's not there. Or you can also reach us at fedjuice.com, www.fedjuice.com. So getting into the S&P here. So we talk a lot about this three-headed dragon that I think is driving this S&P. You have the Astro and the seasonals. You have the Fed juice, and then you have the dollar juice. Dollar juice is a recent addition that we've added here to track the S&P. And I think you saw that yesterday when the dollar rallied. All of these markets got hit. This is a weekly Fed juice that I look at in terms of natural gas. And it's something that I like to look at, which tracks the S&P beautifully. If you price the S&P in terms of natural gas, and this actually did go into a sell back on 8.7. So I kind of look at this one as an interesting, like, big picture view, but it's still in a sell here. It's trying to hook back up, but this has just done an excellent job back since March of 2018 of timing weekly turns on the S&P. On the big picture, I feel like we're still okay. I feel like the Fed juice is relatively stable. It is having a little bit of a pullback on the weekly time frame. It's flattening out, but we're essentially still near all-time highs. So on the big picture, I'm not too concerned. But on the short term here, I think for a few weeks, when I say short term, I mean a few weeks, I think we could have some issues. Now, this is the S&P daily chart here, and you can see all of these sell arrows that came in. And we had these out ahead of time on the market. And essentially, this Fed juice went into the sell on 9/11 here. I'm circling this on the chart so you can see it. But then you had all of this Astro coming in, confirming this. This should actually be on this planetary speed should say 918 there. Sorry, this should say 918. But this is really pointing to some headwinds for the S&P for sure. So when you have the planetary speed index and you have the Fed juice both pointing down, the market tends to go down. I mean, it's and even with the Fed in there, trying to push this back up, there is the potential now for some downside move on this market. So we do have, just like I said, a lot of negative Astro coming into the picture here. And the second half of the month is definitely more negative than the first half. This is the dollar juice. We track this too. This is the dollar juice. The dollar juice is also in a sell. So this hasn't changed. So, when you've got the Fed juice in a sell, you've got the planetary speed index, and you got the dollar juice in a sell, there's a pretty good chance that your market's going to try to go down on a daily basis. Now, we do post a daily update. And I'm just going to show you a sample here. This is kind of a sample of what you would see on the closing bell. So what I do is I try to give next day advantages, medium term and long term. So that way that, depending on whatever your perspective is, you can see the longer term is down, and that would be just like the Fed juice. And then the medium term would be, a shorter period of maybe a week or so. And then the next day would be, what's going to happen on the next day. So that's definitely there on a daily basis for people to check out. And I also post on this closing bell, I post all the different signals, but I really just summarize it for the next day, the medium term and the longer term. So, you can just look at those three boxes and tell more or less what's happening. And so, right now the energy is pointed down. So we've also been talking about silver and gold quite a bit. I have a metals service too that we talk about. And we talked about silver and gold coming into a localized high, a seasonal high. Now, this is an example of what I call the cat master signal. This is combined astro and transits. So this is a combination of many things put together. And so what happened here on silver was we hit this seasonal high back here right around the 3rd or the early part of the month. And I've been bearish on the metals for quite a while. And I use a combination of the Astro and also I use the Fed juice to talk about this. But really, I see the metals having issues. One of the reasons being that, like I said, the Fed juice is just laying down on its belly and it doesn't want to get up. And when I see that, to me, that's spelling trouble because if the dollar does turn up, if the dollar does bottom, the metals are really going to struggle here. So at least on this foreseeable future, I see the metals having issues. And even last Friday, I put this up here. This was last Friday. I was, very clearly calling for these metals to be down. I mean, I had copper, if you look at this as the next day here, the medium term and the longer term, I had copper, silver, and gold all pointing down for Monday. And Monday we saw that collapse. in gold and silver. So I just find that if you combine the Fed juice with the Astro, you get better outcomes. I mean, the Astro can be very good on its own, but sometimes it's not. And so the price has to be moving consistently with what that Astro is telling you. So the idea here is that if you look at silver here, this is the chart that we were looking at on, coming into last Friday. And, this is your seasonal high here on silver. This is on the 3rd of September. And your Fed juice really hit this sell signal on the 17th. So you had the cat signal, the cat master signal with the Fed juice. And then I also have this new little blue arrow here. I don't know if you can see that on the chart, but that's actually looking at retrograde activity. So what that does is that looks for these specific, just a one-day play that's based on retrograde activity. And those tend to pick up rogue waves, what I call rogue waves in the market, because when planets are changing direction and going retrograde, they tend to create havoc on markets. So they create like these ripple effects on the markets. So whenever these little blue arrows show up, you tend to see chaos on the markets. So that showed up on Friday. And so you had all three of these in a sell on Friday. And then, of course, we had the move lower on silver and gold on Monday. So, so far this has been going pretty well. Now, that's not to say that silver and gold can't rally, but as long as this Fed juice is heading lower, I think they're going to have some headwinds. So this is silver here. This is the Fed juice for silver, a bigger picture of it. And you can see that it's still just clearly heading lower. So, the price action has to be consistent with the signals. And if it's not consistent, then you just don't get a signal, right? If they're in conflict, if one is up and one is down, you have a medium and a long term going in different directions. But in this specific case, we still have them headed lower. And I still think with that dollar doing what it's doing, if it's trying to bottom, there's going to be headwinds here for sure on the metals. So here's a similar chart of gold. So this is the seasonal high up here. You can see this was also on September the 3rd. So it has a very similar look to the way that silver did. It has the Fed juice in the sell. It had the cat master signal making a sell on the 16th. And then, of course, we had that what I call a single retrograde cluster on the 20th. And then you had that decline there. So people are asking about gold and how far it could go down. I don't think it's unreasonable to see it go back to that summer level, to that summer range. So I think that's definitely on the table.
Hey, thank you very much. Shane, stay with us, please. We've got one more segment that we've got a few questions people are asking. So if you'd please stay with us and talk to us about the Equinox that we have.
You bet, Larry.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we're back, folks. We're speaking with Shane Smolian, wolftrader.com. Am I correct?
wolftraderfutures.com.
wolftraderfutures.com. Please continue, my friend.
Sure. If you can't remember that, just go to fedjuice.com.
Well,
we got that.
Don't forget, I have an excuse now. I have an excuse. Go ahead.
Okay, no problem. No problem. So we've also tracked the dollar juice. So I actually have this now on gold. I'm actually going to start introducing this. It took me a while to get this balanced out, but we actually do have a dollar juice now on gold. I'm going to start to post that today. It's available in the newsletter, the daily update. You would see this, but we did have this sell coming in on the 18th, so it actually did pick it up ahead of time, and that's currently still in a sell on gold. So, gold's got some issues right now, and that I don't think that summer range is. I think that's a very reasonable projection. If it does want to go down, why can't it go down to that 1800, 1750? It easily could. I mean, we have the seasonals are generally negative for the next couple of months on gold, so it could kind of work its way down there. I don't think that's unreasonable. So. I'm just kind of, with regard to these metals, guys, I'm just reading the charts. I'm not a gold bug. I'm not a gold bear. I just kind of read whatever's there, and I just present the data there. So I just thought I would just kind of throw that out there that, these Fed juice indicators and this Astro stuff works on multiple markets. And I think that's remarkable when you think about it, because, it's one thing to have one market that might be doing well, but to have multiple markets that are doing well is a completely different thing. So getting back to this S&P here, so we do have this essentially is still pointed down, and I think that you could have issues for the remainder of the month here. So Larry, what do you think about that?
I agree. I think this is going to be something that's going to probably be in the history books before it's all over, but that's just my 2 cents worth.
Yeah, I know you've been calling for that for a while, so you never know. I mean, I always tell people that, look, this stuff, so far the Fed has not failed, but, maybe one day they could. But I do think that if we do get that big one that you're looking for, Larry, I think we will pick this up with the Fed juice.
The big one, the one we just had was big enough for me. Let me ask you a question. How will we know that the Fed's failed? Will the market tell us that, or will the Fed say, well, we've screwed up, and how are they going to let us know? They're certainly not going to send me a telegram.
Well, that's an excellent question. So one of the ways that I would know is that I would be tracking the Fed data, and I would see a rising Fed data, and I would see a falling market. So, like right now, we don't really see that. This Fed juice here is really kind of an interaction between the price action and what the Fed is doing. I'm going to go over here to an actual live chart and see if I can show you an example of some Fed data, some raw Fed data that I have here. On a chart. This isn't it. Where is this? I have an actual chart that shows the the Fed's raw activity. Thought I had it here, but anyway, so what we would see is we would see a market that is essentially ignoring what the Fed. Here it is. We would see a market that's ignoring what the Fed is doing. You can see here the Fed has had a pullback here, no doubt. They've pulled back since the beginning of May, excuse me, when things got under control. So they're really just kind of holding back on their firepower here. So what I don't really see a failure yet. For me to see a failure, Larry, if this Fed juice continues to rise like this and you start to see a market that's going like this, to me, that means that they've failed, right? So I haven't seen that yet. So right now what we see is a Fed that has been pulling back and a market that eventually just kind of followed a little bit here. Now, I think at any point, if they want to stop this selling, they can. I think that they can easily crank this back up again. If we get back up here to these COVID levels, I think they can stop the selling whenever they want. So I don't think we're quite there yet, but as long as that Fed juice, the 3.0 is in a sell, there's potential for downside. And as long as your planetary speed index is falling, there's potential for downside. So, I tell everybody, you should be very thankful if you make money to the short side on this S&P, because it is so difficult to short this S&P. It's one of my least favorite markets to short trade. It's just it's nutty. It's crazy.
May I expand on that just a second?
Sure.
You should be thankful if you make any profit, short or long.
Yeah, definitely. I agree with that. But I mean, especially on this S&P, because it just has this strange back and forth action that happens. Like we saw yesterday, like it was going down. Now, we did have positive Astro coming in near the close, so I figured we would get a bounce. But you just saw that, it was going straight down, and then all of a sudden it just does this U-turn and goes straight back up. And so, we see that when it had this reversal, this is what I call a fall out of the sky reversal. So this was a 94% RSI, and it wasn't really tracking the Fed juice. I mean, the Fed juice was still in a buy. It looked like it was going to go higher, but it hit an RSI fatigue, and it just kind of fell out of the sky. And so when that happens and your Fed juice is rising, I still had a rising Fed juice at that point, you start to get these violent back and forth reversals like this. And that is not good, man. That's not, I mean, if you're trying to catch a short trade and it looks like it's breaking out to the downside, and then the next day it does a 180 and goes straight back up, and then it goes straight back down, and then it goes back up, that is difficult to trade. So I mean, this is the first time here you can see these bars, the candlestick, people call these the marching soldiers or the black crows or whatever it is, the three in a row that do this. But typically, this is the first time we've seen a consistent marching down on this S&P. And I think, like I said, as long as this Fed juice is in a sell, there's the potential for that to continue. So, it's a tough call. I mean, it's if we didn't have the Fed in there, I think that we would have a chance to have some really, really protracted selling. But the reality is the Fed is in there, and they're doing their best to support this market and to expand their operations. So you can see this Fed juice. So this is an actual zoom in of the Fed juice, and you can see it's nowhere near turning. And one of the reasons I like this Fed juice 3.0 is it's an interaction between the price action of the S&P and the activities of the Fed, the operations, the net operations of the Fed. And it's very stable. It doesn't really change direction. It doesn't get whipped around too much. I mean, it did, the market did turn well before this, but once this gets into this sell, this is kind of like inertia, and it just keeps going in that direction. So this is one of the reasons I really like the Fed juice, because it doesn't get faked out too easily. So
makes pretty good sense to me.
Yeah. So anyway, those are just just an example of the S&P. And then I talked over the weekend about volatility on the markets. So this is a chart here of the S&P, and I just want to point out this concept of ATR. So ATR is the amount of ground that the price will move in a day. So if you look at this, if you price adjust this ATR, this is the 2020 here. This is the COVID here, 2020. And this is actually the 2008 decline. So if you adjust it for price, because of course the S&P is, 4 or 5 times the price of what it is, the volatility was actually higher during the 2008. But what we've seen here is a very high spike in volatility here, and that changes the dynamics of the day-to-day trading too. And we've just continued to see these wild spikes. Even yesterday, the ATR was over 100. So that means that the price is going to travel 100 points in a day.
Wow. Hey, let's stay with us for one more segment. Shane Spolian, Wolf Trader, Futures.com.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, BAM! As well as,
whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we're talking with Shane Spolian with the WolfTraderFutures.com. We have a question, my friend, and that is, will the price of gold have a big impact on what the Fed does if they change something? I mean, because, there's gold's had pretty wild ranges now. Does any of your Fed juice?
I think the Fed policy relates more to the dollar, and the dollar relates to gold. I think that's more of what it's going to be. I don't think, the dollar could still rise if these other countries start mimicking what we're doing with these credit facilities, and they kind of out stimulus us. I think the dollar could rise. I think one of the reasons it fell so much is because the Fed was a leader in these new tools, these new monetary tools to help out industry. But if other central banks start to mimic it, I think the dollar could rise and gold could fall. So I don't know if they're looking at gold per se. I do think the Fed is looking at cryptocurrencies for the long term. I think they're watching all of these. I think eventually, I think there's a reason why Bitcoin is on the CME, because there's a reason why it got on. I think they're watching it. So I think they're probably more interested in the crypto, to be honest with you. But you can see this. Hopefully that answers the question. You can see this S&P is kind of pushing back down. I think there could be trouble this week, Larry. I really do. There could be some issues from now throughout the end of the month. And then next month, there's that retrograde Mercury coming up that people point that out, that, sometimes that coincides with, whenever you've had a market crash, the Mercury is retrograde within 2 to 3 days of a crash. So we got to watch that for next month too. But right now, I like to focus on the present moment. And right now it's tilted down on the S&P for sure.
Okay, that sounds good. Do you want to tell the folks how they could reach you?
Sure. For those of you who are just tuning in, I'm Shane Smolian from WolfTraderFutures.com. You can reach me at Shane@WolfTraderFutures.com, or you can head on over to the website, www.wolftraderfutures.com or www.fedjuice.com. We're the only service that tracks the one and only Fed Juice, which tracks the operations of the Federal Reserve on multiple markets. So you get those updates daily, and check it out.
Thank you very much for being with us, my friend, and we'll have you on again soon. We'll be right back
Larry.
with you folks on tomorrow. Our guest will be Tim Bost of Financial Cycles Weekly. So stay tuned for tomorrow.